Hello and welcome to the latest edition of the Gold, Goats, and Guns podcast. I'm Tom Luongo. It is Tuesday morning, the 2nd of May, 2017. We got a lot to talk about today, so let's get right to it. All right. The thing that's really got me worried right now, and I want you to be aware of, is the situation that's unfolding in Canada. Now, for years, I've been convinced that the European Union would be the beginning of the end of basically the enormous buildup of sovereign debt around the world, and that the dominoes would start in Europe and then contagion would spread across to Japan through the currency markets and then possibly into other areas, and Canada being one of them. But the interesting part about it is that we've got a bank run, honest to God bank run, unfolding at Home Capital Group in Canada. It started last week. And this morning, I'm seeing the dreaded contagion word as it moves to another bank. And this is one person pointed out to me last night on my Periscope that Canada doesn't have a lot of banks. So while these are small alternative mortgage lenders at this point, understand that the Canadian property market has been on fire, or in the immortal words of Dan Patrick, en fuego, for a long time now. And a lot of that has to do with Chinese capital flight. Middle-class Chinese looking for a way to protect their capital, their newly found wealth, as the things deteriorate in China, right? And that's part of the reason why Bitcoin is continuing to set all-time highs along with Ethereum and all the other cryptocurrencies. It's a way for Chinese to get around cross-border capital controls put on by the Chinese government. And another way of doing that, of course, is to buy real estate overseas. And they've been doing it, and they've been bidding up prices in places like Vancouver and Toronto like you would not believe. And we've seen a bit of this here in the United States. Part of the reason why, a cardboard box rents for $400 a month in San Francisco is for the same reason. And it was happening in the last few years when the dollar was low, and up until about 2013 into 2014, that trend continued. It's still continued to this day, but it's beginning to roll over because the dollar was low before the taper tantrum back in May of 2013. If you remember that, when Bernanke first came out, the Fed chairman at the time, Ben Bernanke, came out and said that they would be tapering QE. And that's what started the current bull run in the dollar. That's been on pause for a while as all the central banks and all the governments get together and stick their fingers in the dam and say, no, stronger dollar bad for the global economy, which it is. But it's something that they can't stop because they're just politicians, and markets are bigger than politicians. They're much bigger than politicians. And Justin Trudeau, the Prime Minister of Canada and the man with the stupid thing on his head, is going to get that lesson. And the truth of the matter is that what scares me about these bank runs that are happening in Canada right now is that Trudeau is completely unprepared for this. He's absolutely the wrong person to be in charge in Canada at this moment in time. And in thinking about this, I've now become incredibly bearish on Canada. And I've been bearish on Canada for a while as well, honestly, because a lot of this has to do with oil debt, and a lot of this has to do with a lot of the housing market as well, and not just Chinese capital flight, but you had a tremendous housing boom in Canada due to the huge run up in the price of oil and all the investment that was happening out in Alberta and Saskatchewan and places like that, and all that's gone bust. It's all of it's drying up, and it took a couple of years for that to finally become a reality in a lot of people's minds and the perception, and it's now starting to hit the confidence in the Canadian banks, even though it's hit what the banks have been doing since the oil markets started going bust back in 2014, is they've been just ignoring the problem, allowing companies to not pay their revolver loans and things along those lines, and so you have a real serious problem there. So I want you to be aware of that. It's potentially a historic beginning, because look, the credit crisis, the sovereign debt crisis during the Great Depression, Martin Armstrong brings this up all the time. It started with a small bank in Austria, Credit Onslaught, and from there, everything spread. Now today, things are different. The central banks are aware of the situation. They're aware of the potential contagion problems, and they're aware of of what it is that they can do. But like generals, they're always preparing for the last war. And the truth of the matter is that they have tools in place to deal with the situation that developed after Lehman Brothers. But who knows if they're going to have the right tools this time? And to be honest with you, their balance sheets are so bloated. What are they going to do? The Fed can't take its balance sheet from $4.4 trillion to $14.4 trillion. They can't do it. If they do that, it trashes the confidence in the dollar, trashes the confidence in our sovereign debt markets, and everything explodes. So it's going to be, this one's going to be an enormous problem, and it could be starting right here, right now. Okay, and then we have French elections on Sunday, which I'm going to get into, and I'll probably get into in a podcast later in the week as we get closer to that event. We've got the debate tomorrow night between Marine Le Pen and Emmanuel Macron, which is, I think, her last chance to really try and seal the deal to get a bunch of Mélenchon and Fillon voters on her side and push her numbers up from 40% up towards 50% and win. It could be very interesting. It could be a very interesting time on Sunday. But interestingly enough, it may not be Le Pen's potential victory in Europe that starts the process now. It starts the contagion process or the dislocation process, however you want to put the black swan event. It could be a small pair of Canadian banks. That would be very interesting. All right, so because of this, all the safe haven assets are getting whacked, right? Gold, U.S. Treasuries, they're getting whacked, and the U.S. stock market is trying to push higher. I'm doing this just before the market opened on Tuesday morning, so S&P futures are up a couple of points. The Dow is threatening 21,000 again, and all of that. So I'll show you some charts about what I'm talking about and why I think this is more serious than just some little note being discussed on Zero Hedge. This is far bigger than this, and I'll have links in the description to this podcast so that you can read about what I'm talking about. All right. The last thing I want to talk about before we get to the charts is the fact that Trump and Putin are actually speaking again, which is a very good thing. And I'm sure, and if that's the case, and noting this morning as well, that they had a phone call last night. This morning, the Foreign Relations Committee shot down or tabled a bill that would add to Russian sanctions, instead pivoting to Iran. This news just literally came out about 30 minutes ago via Zero Hedge that I saw it. Very important that happens. You can almost wonder that Putin and that Trump had to put something concrete on the table to get Putin to talk to him. I think that we can take some stock in the idea. I read an article at the Veterans Today last week that Tillerson actually went with hat in hand to apologize to Putin for the strike on the Al-Sharat Air Base in Idlib on April 6th. I'm not sure that I agree with that, but it would make sense that some of the data points we're getting now may suggest that the relations between the Trump administration and the Russian government behind the scenes through back channels diplomatically are improving, and that Trump has had to table his ego and apologize for what is one of the dumbest things I have seen in a foreign policy context in a long, long time. So made this point before, I'll make it again. Whatever it gained him domestically, it cost him a lot more internationally, and it's going to cost him a lot more in terms of positioning going forward. You do not bluff Vladimir Putin, and you do not try to strong-arm Xi Jinping, and that's the situation. So from a foreign policy perspective, I think things are starting to improve, and we'll see what's going on. We'll see if that's the case. Again, it's not interesting to talk about the news after the big stuff occurs. It's interesting to talk about the news before it occurs. Okay, we have to look for leading indicators first, and then spin likely scenarios and what those things actually mean. Okay, it's incredibly important in geopolitics. All right, so let's go to the charts. Let's look at gold. All right, so I've got the weekly chart up here. This is how far we've moved this week. In just 2 days, and just we moved mostly yesterday and last night. It was a big move down yesterday. This weekly low here is your first layer of support. at around 1249 or so, and then after that, all of these little peaks in here really don't matter. What's important is that if we break this on a weekly closing basis, we're very likely to first touch this low because there are some highs in this area here. So in this 1240 range, 1235 range, and then we're back to 1200. And given the weakness in silver and the fact that silver's trading below $17 an ounce, oil hasn't moved. Silver is getting sold with impunity. That's dragging gold down, as well as what I'm seeing in the treasury markets and the Canadian dollar, and I'll get to that in just a second. So at this point, what you want to watch for in gold is holding this 1250 area and seeing some kind of bounce before the end of the week. If we don't get a move, because remember, this is now a 3-bar reversal in effect, but truthfully, if you consider this an up bar, because it's still higher, it's still part of the uptrend, then we had a weekly reversal signal last week. And even though this is a down bar within an uptrend, because we broke higher and closed, certainly above the open from the previous week, this can really be considered an up bar, and this is a weekly reversal signal. Now, it doesn't translate to a reversal signal, a bearish reversal signal on the monthly chart yet, which is good, because that would take a move down below this line, this low right here. So this is a very critical area for gold for the rest of the summer. Okay, and if this breaks on a weekly closing basis, you should be able to short gold down to $1,200. Okay, all right, moving forward. So those charts I produced myself. These are just screen caps from investing.com. I get all my data from investing.com. So the gold numbers and the silver numbers are usually a little bit out of sync with the rest of the world. These are there because it's data and prices based on their contract for difference, not the COMEX. So there's going to be 50 cents to $1 difference here or there. All right, just in general. So don't take when you're looking at quotes and whatnot. When you're looking at prices, you have to round them off to the nearest dollar or nearest dollar or two. Okay. So, but when you're looking at yields in the 30-year U.S. Treasury bond or Forex numbers or whatnot, no, you can take those numbers you can take all those numbers. So what I've got here is, as I went to press this morning, the 30-year bond was trading at 3.018%, which is the high here. Okay, it's the high of this bar. It's not shown on this chart, but that's the high. I checked it before I took the screen cap. So important to note that if we got a daily close above this today, this is a weekly chart. If we get a daily close above this level today, that's going to give some impetus to test these levels here. And if we get a weekly close above this will be a weak, very weak, because it's 3 bars, reversal signal. But again, the same thing here. We've got an up bar during a downtrend. So really, this is these 2 bars should be considered some kind of reversal signal. Not a particularly strong one, but one nonetheless. And so again, gold, treasuries are being sold to safe haven plays. Dollar liquidity is what it sounds like that we have. Dollar liquidity issues. And why do we have dollar liquidity issues? Because the Canadian dollar is breaking out. So I did highlight the bar that's important here. The high in the week of January 11th, of November 1st, because this is 1 November 2016, because this is the European, investing.com is a European site. This is the monthly chart of the Canadian dollar. Note the high in this range of months is $1.36. We're trading at $1.37, and we closed above that level, above this level last week. So there's been a break our last month, and then therefore in April, we had both a weekly and monthly close on Friday above this November high, meaning the Canadian dollar is breaking down, and that's telling me that the home capital group issue is sincere. We're getting a move in the Canadian dollar markets that's significant from a long-term or at least a medium-term basis. This is a harbinger of the Canadian dollar is now set up to move back towards $1.40, $1.42, something like that, and that's really bad. And it's being sold with impunity, and it means that we're selling Canadian dollars and we're buying dollars. And that's part of the reason why gold's getting whacked. I think got whacked. It has nothing to do with like North Korea or any geopolitical events, because all of that stuff is fading to the background. Trump got called, his bluffs got called in both North Korea and Syria, okay, by both the Russians and the Chinese, and so The markets are pulling the war premium off of the safe haven markets, right? They're pulling that war premium off of U.S. Treasury bonds, gold, German bunds, and whatnot, and now they're looking to shore up currency liquidity positions for overnight markets derivatives, that kind of thing. And that's what's going on. All right. So that's really what I've got for this morning. I don't want to keep you any longer than that. I'll have links to what I think are articles that bear on this podcast in the description. If you like what I've got to say, give a like and follow, please. Especially on VidMe, I'm trying to get that channel up to a minimum of 50 followers so I can get verified, so I can start monetizing that. Trying to monetize that channel. And give a like, give a follow, give a share. Would really appreciate it. This is Tom Luongo, and you guys have a great couple of days. And as always, keep your stick on the ice.